Hi there, this is Richard, BTC admin, BTC Richard. There's been a lot of questions for some weeks now about the use of arrows and rather than boxes on the daily setups charts and inside the encyclopedia. So as promised in the Discord community, I'm putting together a relatively short video showing you how to interpret these arrows. They're not going away. We're not going back to boxes, and there's good reasons for that. So hopefully this video will help people get used to the idea and take it from there. So let's go with a recording I've got here of a presentation. So let's get on with the presentation. This is again swing trade setups on the E-mini chart, interpreting the chart trade setup arrows. What I'm going to talk about now is just briefly an introduction on candles, setups and signal bars. Let's go through some slide samples, explain why Al is actually using these arrows now. Yes, I know many people much prefer the boxes, but as I've said, we're not going backwards, and hopefully you'll understand why by the end of this. I'll then give you some trade setup arrow examples for February 21 this year, because it raised some queries on why the actually entry bar was 3 bars after the signal bar. And this happens now and again, and so I thought it'd be good to use that day as an example. And using the same day, I've got a short market replay video before we close. So here's an extract from the Brooks Trading course, video 8A, and some of the confusion may in fact be coming from this video. I intend to modify the video to add the comments in I'm going to talk about now. So we're talking about signal bars and entry bars. Video 8A. So the first thing is the bar where you enter the trade is, not surprisingly, the entry bar. So there you can see an entry bar using the trusty boxes that we've been used to up until more recently. And that box is in the place where you'll be placing your order. Now we enter because the signal is created by the previous bar. That's the signal bar. Now this is the basis of everything that Al does now, with the arrows, with the boxes for at least the last 2 or 3 years. But there is actually another case which may be causing confusion if you've gone through the course and remember this point here. But anyway, the best signal bars are reversal bars, assuming context, of course. The context here is a trading range. It's a triple top, high, double top or triple top. This is a confusion possibly. The signal bar and the entry bar can be the same bar. Now this is something that Al stated in the course at the start, but he found that this confuses people. So he flipped that box to the right, and for the last few years now in the encyclopedia and in all the charts, you'll never find a signal bar and an entry bar in the same place. Now this makes sense anyway, because if you're waiting for the bar to close, by the time the bar closes, the market is already painting the next bar. So you can't actually enter on the signal bar unless you're jumping ahead, doing a limit order kind of entry, or if you're just looking at the bar timer and getting in just before it closes. But that's tricky in a discretionary trading sense. So I want to encourage you to ignore this going forward and forget about this. And I will update the video with a comment on this slide to explain that this is no longer operative. So what we're looking at again is sell signal bars like this, buy signal bar as that per example, the entry bar 1 tick or a pip if you're on the Forex below the signal bar. This is the standard that we've been using for several years now, and for the buy signal bar, the buy entry bar, the next bar. So this is what you need to look forward to. And again, let's ignore these. This is where in the course it did say that in some cases it could be in the same bar, but that's not what we're talking about now. So to avoid confusion, you must stick with sell signal bar prior to entry bar, and here buy signal bar before buy entry bar. And for an example, here's just one extract from part 13 of the encyclopedia. You can see here that all the boxes, the old versions, are all below the entry bars. This is how Al has been drawing these boxes for some time. Here's an example from the encyclopedia. Now, this is the unmarked chart, which we use on every day's slides to allow traders to look at the chart, do their analysis if they haven't done it already, and then mark up your chart, and then Al will present his version. This for the February 21 is the version, and you can see here, this is the area here where we got a lot of queries saying, hey, what's going on here? How can that be an entry bar? This bar here is a bear bar. Well, actually, this is the entry bar here. But you'll notice that the highs of these three bars are all the same. So placing an order just one tick above, it doesn't get filled until you hit this bar here. You'd be waiting for 10 minutes, nearly 15 minutes there before your order goes in. And the point I also need to make is that you should be placing your orders in the market and then waiting for them to be filled. In most cases, sometimes, of course, the market just runs so quick that you don't actually get in. And in fact, that is the case, as we'll see with an example here later. So again, here going down here, this arrow entry bar below the signal bar and so on. So this is how that chart would look with the old boxes on. Again, people like to see the boxes, but if you notice here, it's very, very tight here. The chance of getting in there is very difficult sometimes, as you'll see from a video later on this day, that in fact was the case. Unless you placed your order one tick below this bar in less than 5 seconds after the bar closes, you would not have got into that trade. But we'll discuss that later. Price action sell signal bar and the sell entry bar, selling below the signal bar. This is a standard, selling below. And a price action buy signal bar, as I've just explained, this bar here, but this is the buy entry bar, 3 bars later. So keep that in mind. So this is how it looks in the new arrows. So again, no problem, sell entry bar. Entry, everywhere where you see an arrow, that's the entry bar. And then you yourself can analyze that bar and say, well, where would you get in? Are you getting in one tick above here? Fine, no problem, you're in. Are you getting in one tick above here? Fine, you wait 3 bars and then you get in. It goes down, but then it carries on up. You can actually get in anywhere in that bar. If you're late, which is quite often the case for discretionary trading, certainly in the case of this one here, you will have missed this trade, but you leave it in the market and then you get in on this bar. As long as the order is in the market, you'll get in either on this bar, which is the entry bar, and then sit through 10 minutes until it actually does go down. Or if you miss this trade here, you'd get in here. This is showing you both the old and the new systems together. In this case, again, the square is not really much use if you can say, well, there's nothing, you can't get in here. You have to wait until here before you get in. The arrow is cleaner, very much cleaner. So hopefully you can get used to it. And just depending on your own trading style, you can decide where you get in, how you get in, how fast you get in, and take it from there. So why is Al using these arrows? Many people prefer the boxes, but change is everywhere, right? We must learn to change. So this is an example of Al's book that he's working on, an encyclopedia book. And this is just showing you the quick sample, showing you the chart here, which is the important thing. And this is the text, of course, to a couple of pages from his book on bull trends. But the important thing is, in this black and white chart, we've tried all sorts of ways to use the boxes, but there's no way to use a box without it obscuring important parts of the chart. It doesn't look right. And being black and white, which is what the book will be published in, there was some thought of color, but it's far too expensive. So Al has decided on black and white. It's very clear. And you can see that arrows are far clearer to show the entry points. And in the case of here, we've got a buy entry example. This is draft. The arrow looks a bit small, so maybe it'll be a bit bigger in future. The point we're making is that arrows are needed for the book. So rather than have Al working on arrows in his book and boxes on the encyclopedia, it makes more sense to have the same on both. And the same for the cell example here. So again, this is why Al made the point, made the change, and that's where we are today. So let me give you some examples using February 21, showing you that split between the entry bar and the signal bar. This is the same chart. There's the first entry, and then sell below the signal bar. When you see that arrow, visualize your own trading style. If you're fast, you can get in at that point. If not, you'll get in somewhere during that follow-up bar. The next one down here, this is getting in pretty low near the bottom. Sell below signal bar. And this day was a gap down. This is getting near the bottom of trading range, but it's still a okay sell. And here's a buy. This is one that's 3 bars after. And there it is, using a longer line there to show that it's 3 bars to the left where you find the signal bar. That's the next one, which is fairly straightforward. 1 tick above the previous bar. And then going down, same again, sell below signal bar. Going up. And again, you notice this is 2 bars to the left. So if you'd have placed your order 1 tick above that bar, you'd have to wait 2 bars before it goes in. And there's the rest of the bars for the day. Quite clear. Important that all trade setups are based on stop entries. That's the standard that we use for the daily setup charts and encyclopedia, unless the encyclopedia is talking about limit orders, but that's a special case. So ideally, you should be placing your stops early to avoid missing the entry, which you'll see from the video later. And that's one of the slides for the day on the 21st of February. So now I've got a market replay video and we'll conclude. So hopefully this is going to make things clear. I'm using NinjaTrader market replay. Okay, this is a quick video, a live trading, sort of live trading, market replay, NinjaTrader, just to replicate the entries on the February the 21st charts that we've discussed already. Now this very first entry, this bar is about to close. It's 11:14. This is Hong Kong time, 13 hours ahead of New York. And the reason why I've paused it here in particular is because actually the entry that Al did show is very difficult to achieve, because in fact as soon as it closes at this point it'll jump down and go up. So you need to get your order in very, very quickly. So you've got to be very fast in order to get your order in. So I'm going to buy the limit here, put it in place, because I want to show you things that need this to be in place. So bear that in mind, that the setups on the chart, sometimes in hindsight, the way they're set up, you've got to be a really fast mover to get these things in. Now, I don't use this chart trader in Ninja. I've got a dome which sits to the side of the chart. I could get in there relatively easy just by clicking on the price. If you've got that kind of system, no problem. But for this system here, that's not the case. So I'm coming down to real time now on the market replay. So looking at what's happening so far, you can see already that we've actually got the Globex here. This is the extended hours, the overnight hours, as they call it in US parlance. So we've already got a double bottom here from the Globex low. Again, we've got the high here, somewhat of a bear trend here overnight. It's a gap down. So we do in fact have a potential resistance level here. And sure enough, that's really what we got here. On Al's chart, this is marked as a bull trap. It's also effectively a trading range. But now we've got a sell the close bar, a concurrent bear bar here, which is such a trade because we're in a possible bear trend from yesterday and from the overnight. So again, this is a reasonable short to take. Sell stop market. Okay, so we've got a sell order placed here. So let's see what happens. Let's carry on. Watch the market. Okay, there's the first one here. Bang. Instantaneous. Just like that. So quick. You had about 5 seconds, which is reasonable for a dome, but not so good for this kind of auto entry. The other thing I need to say is that really, I wouldn't be using a single order like this. When I place an order, there's a bracket order. So we've got a sell stop here. We'll have a buy stop up here, say. So we've got buy, stop market up there. And then we go down here, there'll be a buy down here somewhere. So all I'm demonstrating here is how the entry is on this bar. So I'm not so interested in where it goes to. Let's go for a scalp near the bottom here. So let's speed this up. I want to take us to the next example quickly. So I'm going to put this in relatively high speed just to get it moving. So there we go, we're going down, thankfully.
Order filled.
Okay, we've made our money. There's the first of a potential double bottom there. So now I want to stop this now because I need to demonstrate the next example. Now on the chart, some people sent emails to say, why did Al mark the next setup 3 bars later? Now this bar as it's forming is a double bottom. Again, another double bottom across the bottom here. I'll just draw that in like that. And then it's a trading range, you can say, the bulk of these bars here with this long tail. So we're looking at a possible long here. So the long is somewhere up here. The bar's not closed yet. We're one time. So here we go. 30 seconds to go. Let's speed it up a bit. It's no problem to speed up here because, again, it's going to be easy to get an order in here. So now we want a buy order above here. So we're going to place a buy stop order here. So now what's happening? This, again, is the signal bar. A buy stop 1 tick above. It's still not initiated. Let's get rid of this because, again, when I use bracket orders, these things would cancel out automatically. Again, for a buy stop here, I'd have a sell stop down here somewhere. It actually goes in automatically at 10 points away. And I'll get a sell stop up here. Sell limit 1 there. Again, this is just inside the range, and that's where I'll be looking for on this particular piece of chart. So now it's coming up. We're still not in the market. That's 2 bars. So again, let me speed up because we don't need to waste time watching the market. So this is a signal bar. This is not the entry bar yet. We're waiting to see what happens. So there's nothing happening here. Now this one coming up.
Order filled.
Oh, there we go. So now we're in. So this is the entry bar. Okay. Again, the stop down here. relatively safe. So we're still looking at a particularly worrying time for some people here. They'll be probably getting out 2.3 points. Anyway, here we go. Let's speed this up. Okay, looking good. Wow, just missed our target there.
Order filled.
Yes, there we go. Right, okay, we're finished. So basically, that's all I wanted to show you. Let me just stick a pause on here once it reverses on the next bar. And now it'll come down again and so on. So that's enough. So the point of showing you this video is that traders write to me quite often and say, hey, why is Al using arrows? Well, look at your platform. This is NinjaTrader. Where are the arrows? Well, the first arrow is here. This is the bar where the actual order is affected. That is the entry bar. So the arrow goes above the entry bar. Where is the entry? One tick below the signal bar. Over here, this is the signal bar. Order one tick above. Where's the entry? 1, 2, 3 bars later. So that's why, again, some traders wrote to say, hey, why is bar 18 the signal bar? No, bar 18 is not the signal bar. Bar 16 is the signal bar. And this one here is where it actually goes in. And this, in this case here, is where we took 1, 2, 3, about 4 and a bit points profit. So not quite a scalp there, but that's just a demonstration. So that's what I'm trying to show you here. So when you see an arrow, that bar is where you get in. In this case, a lot of people, if they're too slow, would miss it. But then again, you could leave the order in the market, and then when it comes down to this bar, it would go in, just like over here. So you could have placed the order here, waited, and bang, you're in the order. 1, 2, 3, and down to the bottom here, just like here. So hopefully that's helpful. Thanks a lot, and bye for now. Okay, well, I hope that's helpful. Any questions, of course, you can leave some comments below or talk in the Discord community or in the forum on the website. Thanks for your time. All the best to everybody and wishing you good trading. Bye for now.